and welcome to Bank of Baroda presents Empowering the Ecosystem, partnered by ET Now. This is a special series that looks at how the banking system impacts businesses and individuals. We've been taking a deep dive into all of these aspects, and today in our grand finale, we are very excited that we have the opportunity to speak with Mr. Sanjiv Chadha, the MD and CEO of Bank of Baroda. Thank you so much, sir, for joining us on the show today, and welcome to the show. I want to say that this is a real pleasure to be speaking with you, considering that it's been a while since you've given a long, detailed interview, and you've taken over the reins of Bank of Baroda also at such an interesting, pivotal time. In January 2020, the world looked very different than how it is in November 2020.
You're absolutely right. Although when it comes to Bank of Baroda, it was still an interesting time. We were halfway through an amalgamation, amalgamating Dena Bank and Vijaya Bank into BOB. This was to serve as the template for consolidation of other public sector banks. And we were just about beginning the retail consolidation, which means in terms of merging branches, moving people, and that's when really COVID hit. So it was a fair bit of a challenge to that extent. But then again, I think when it comes to banks in general and public sector banks, I think all of us are trained to really look at new challenges, new situations every few years. And there's tremendous resilience which is there in the workforce. And to that extent, I think there's much to be grateful for in terms of the fortitude that the workforce showed in keeping things running. There was hardly a day when any branch was closed, apart from administrative reasons where the local administration said, look, you need to close down your branch. And to that extent, I think the bank took COVID in stride, delivering almost uninterrupted service, and importantly, keeping its sight on the main goal of completing the amalgamation on time. To an extent, I'm not very surprised that the banking system in general and public sector banks in particular, and BOB even more so, has been able to deliver uninterrupted service. And as far as COVID is concerned, we may talk about the impact, but nobody talks about the fact that the banking system let the country down.
You know, I think that's a very important point, Mr. Chadha, because one thing that stood out is the banking system on the whole was completely uninterrupted. People didn't face any kind of panic or inconvenience to add to the stress that was already going around with lockdown and pandemic, etc. What really came through was the agility that the banking system showed. In the case of Bank of Baroda, can you pinpoint any specific practices and strategy that you put into place to make sure that there is agility, that there is a quick turnaround, even in the current circumstances?
Of course, nobody could have prepared for COVID. It's a once in a millennium event. Having said that, there are robust systems which are there to ensure business continuity. And then technology had been developing. We possibly were not leveraging it enough. So for instance, within a very short period, we were able to make sure that our treasury is able to work with people working from home. Now, if you can do that with something as sensitive and as technology oriented as the treasury, you can be reasonably assured that the bank is in a position to really take any challenge that comes. So I think the biggest, you might say, takeaway from the crisis is, one, of course, the resilience and fortitude of people. Number two, the discovery of the tools that were always with us, but now that we have been able to use so well. And these are tools and these are best practices which are going to far outlast COVID. To that extent, I think there are going to be permanent gains for banks in terms of their resilience and in terms of their ability to look at the next crisis, and crisis will come. In so many ways, COVID has not really brought about changes. It has accelerated the pace of change. Similarly, again, I think when it comes to banking, the habits that people have developed in terms of doing things from home, opening accounts from home, in terms of doorstep delivery of service, I think this is going to be a tremendous change. There's been 100% increase in the rate at which we are acquiring customers for mobile banking. Now, once they have become customers of mobile banking, are they going to go back to their old habits? Probably not. So again, it's said that India lives in the 19th century, 20th century, 21st century simultaneously. So all our customers are not going to be on the same platform. There'll be some customers who actually would be served from branches. others who will be served from their homes, another who might be served through digital, some who might be served through assisted digital. Similarly, some of our workers, again, might be working from branches, other from homes, other in a hybrid model where you come to the office twice a week. I think we are going to see tremendous changes, and these changes can be important both in terms of the quality of service you deliver as also the cost of service you deliver. I think banks that way are uniquely positioned. So I think it's a great opportunity that we have to make sure that the banking that we do is much more relevant to our customers.
You know, another very interesting aspect of this digital plus traditional sort of mix, especially for public sector banks and Bank of Baroda as well, I'm sure, is how these banks in this system became the distributory vehicle for aid for the government during the height of the pandemic and the lockdown. The first tranche of aid and the stimulus package was for the most vulnerable, the poorest of the poor. Can you share that experience and how crucial that was?
I think you're absolutely right. In terms of when we talk of the role of public sector banks, particularly in rural, remote areas, the share of public sector banks is disproportionate. And BOB, that way, is really the outlier. Just to give you one number, our share in the banking system in terms of deposits and advances is 7%. But when it comes to our share in accounts, it is 15%, twice as much. So I think that's where, again, and we are very proud of that. Of course, in terms of mandate to reaching out to the remotest areas, we are fulfilling that. But even more importantly, I think it's a tremendous strength going ahead in the future. The people we are talking of, the 15% share we are talking of, these are the customers of tomorrow. This is the middle class of tomorrow. And I think this is the great strength, again, of public sector banks and of BOB. Now, today we hold something like 15,000 crore rupees in these Jan Dhan accounts, right? And that's something which is growing at a rate faster than our normal deposit growth. So I think banks have to realize that when it comes to the outreach, it is something which is in the enlightened self-interest of banks. It is something that you owe to the country. And certainly as a public sector bank, but even more so, it is an investment in the future, an investment in future markets. And I believe that's something which is going to be an abiding strength for the bank and something that we're very proud of.
This is in terms of outreach to, those who are definitely in need and government schemes. Can you throw some light on the kind of recovery we've seen in the economy since then, in terms of credit growth, in terms of deposit growth, and in terms of corporate credit growth as well?
So I think what you are implying is absolutely correct. I think the importance of the rural economy in terms of the resilience of the overall economy is something which we have discovered post-COVID. And it's something which is certainly reflected in terms of numbers and even numbers of Bank of Baroda. For instance, our credit growth is somewhere in the region of 6%, which is pretty much at par with the market. But within that, the growth in agriculture is as high as 16%. Right? So I think the rural economy has certainly been very robust. And there are other sectors also, I think, when it comes to private consumption, where the distribution network of banks has held up very well. Just as another example, our growth in car loans YOY today stands at 31%, so which is many times what the market growth is. So I think there are segments of the market which have held up very well. And in that, I think the rural market is an unambiguous success story. Even as we go forward, as we talk of resilience, as we talk of de-risking balance sheets, I think we must understand that this is a very important piece when you construct a bank. You must, of course, make sure that retail is a very important part, but equally, rural can be a very important part in terms of building a resilient balance sheet, particularly now that changes are happening, where the government is talking of changes that is going to result in a much larger organized sector when it comes to agriculture. When you talk of FPOs, I think there's a great opportunity for banks to actually look at things very differently. Simply, you have to treat agriculture and you have to treat the rural economy as a commercial proposition. And I think if you do that, there's no shortage of opportunity.
What about other sectors? I mean, while agriculture has been an unusual bright spot, the fact is that some sectors, by their very nature, have been battered because of COVID-19. Hospitality, for one, aviation, etc. Has that been a pain point at all for Bank of Baroda, and how have you dealt with that stress?
We need to distinguish between the structure of the economy and the structure of the balance sheet of banks. right? All of us know that if you look at India's economy, 60% is services, maybe 20-25% is industry, 15% maybe agriculture. But when you look at the balance sheet of banks, it looks a bit different, right? Maybe 60 to 70% of the balance sheet of bank actually is the manufacturing economy, either MSMEs or large corporates. And we have seen both in India as well as globally that the recovery in the manufacture sector has been far quicker than the service sector for very obvious reasons. So therefore, I think when we look at talking of challenges for banks and stresses in the sector, I think to some extent, banks in India have come out and again consistently come out with surprising commentary that the impact of COVID-19 on their balance sheet has not been as catastrophic as we might have been led to expect. I think that also applies to Bank of Baroda. And therefore, we believe that when it comes to our balance sheets, it's not that they're going to be unimpaired. There is going to be an impact, and specifically talked of sectors like aviation, retail, organized retail, hospitality, which have been impacted badly. But these are relatively smaller pieces of the balance sheet. And also, I think the sequence and the kind of initiatives that were taken by the central bank and by the government, I think have been orchestrated very well. You had in the first instance a moratorium, which was across the board, because there was an impact of COVID, which was across the board. And now you have got a restructuring package, which is oriented at certain industries, and there are enough checks and balances to make sure that you're not kicking the can down the road. So I think we have all the tools at our disposal to make sure that the impact of COVID-19 is something which can be contained, and the banks come out of it in reasonably good shape.
Has there been a very good response or demand for restructuring, or has it been fairly muted? I mean, it's an interesting parameter to find out how much stress is out there in the system. So what has been your experience, sir?
This is again something which all of us have been surprised that so far that the demand for restructuring has been significantly lower as compared to what we had anticipated. Now, there are two or three sectors that we can look at, right? First of all, there's the corporate sector. Now, if you look at the aggregate restructuring, probably the corporate sector is going to be the biggest piece because it is the biggest piece of the balance sheet. For BOB, the corporate segment is 45 to 50% of the balance sheet. But nevertheless, as a percentage, it may not be as high as we had anticipated, simply because in the period through which we went through, when we had the benefit of the moratorium, the economy has rebounded significantly. It's not that production is back to necessary levels which were there, but again, production is back to levels which are reasonably sustainable in terms of servicing debt. So therefore, corporate restructuring is going to be there, but not of a very high order. Then when it comes to MSMEs, I think MSMEs have benefited by very timely interventions. You had first the emergency credit line, which was given by the government up to first 25 crores and 50 crores. Now we are talking of medium-sized units up to 500 crores also benefiting from a guarantee line from the government. I think this has been something which is very useful because essentially what has happened is that working capital cycles have got extended and now you can make available 20% of extra cash as a proportion of the fund-based limits, which is guaranteed by the government. So I think these timely interventions have meant that the restructuring is lower than anticipated. Third, when it comes to retail segment, I think it's something where, again, people are very conscious of their credit scores. And also, I think underwriting practices have been fairly conservative. For instance, of our retail loans, 70% of our retail borrowers have credit scores of 725 plus. So it's a very good quality book that you have. So they will be restructuring, but of a significantly lower proportion as compared to what we had anticipated earlier. But again, early days, probably in 6 weeks' time, we'll have a better idea.
What about credit growth? I mean, that has been, and you're absolutely right, sir. Banks have, I think, come out relatively unscathed as of now, as compared to what was expected from the pandemic and the impact of the lockdown, etc. But credit growth overall, I'm not talking specifically about BOB, has been relatively muted. Do you think it will take some time for credit growth to jump up, or is it uneven? Like, for example, you said vehicle loans are performing very, very well.
You're right, but what we need to see it in the context of the fact that we had a slowing economy and relatively slow credit growth the last 2 years. There have been times, maybe 5, 7 years back, when credit grew even 20%. But now it has been growing more in single digits. And this is something which predates COVID. The other thing that we need to understand is, why did it happen? I think there was a capacity overhang which was there. And that capacity overhang was, to some extent, going away when COVID hit us, which means capacities were probably inching up in the 70% or 80%, so that people were looking at capital expenditure. Now that capacity utilization is again a little lower on account of COVID, I think it'll take a little bit of time before people really need to invest in fresh capacities. So I guess you are right. I think when we are looking at credit growth, there is going to be relatively muted credit growth for some time, just as we saw in the case of sales immediately after the lockdown. There could be a spike in terms of compressed demand for some time. But then after that, I don't believe we are really looking at credit growth of the order of what we saw 5 or 7 years back anytime soon. It will be time before we come back to that.
What is the role you see of the banking sector in general, and specifically Bank of Baroda, in aiding and hastening the recovery of the economy? We've seen a better, I would say, second quarter than what was expected. Things are looking up as of now. That is, hopefully there will not be a rebound and resurgence in cases. But in this context, how crucial is the role of banks and BOP?
It's important to the extent that if the primary role of banks is to make sure that capital allocation is efficient, it will become even more critical now. When times are uncertain, I think it's easy, again, to actually go the wrong road. I think banks need to be careful. You, of course, need to be sensitive to the requirement of your clients, and that is where the initiatives of the government, like the emergency credit line, which is guaranteed by the government, are very important. That where the bank's balance sheet is not being put to risk, but nevertheless, in the larger national interest, you must make sure that capacities are preserved and value which is there in terms of assets is not destroyed. The banks need to be proactive in making sure that they support these initiatives. So in the first round of the guaranteed scheme, nearly 90% of all eligible borrowers were sanctioned loans, and almost everything has been disbursed. I'm sure that is going to be the case in the second line. So the first part is to make sure that we support the initiative of the government in terms of preserving capacities. The second part, of course, is that you make sure that allocation of credit is efficient, that you are not really putting money in either zombie companies or zombie sectors, but at the same time, making sure it is aligned to growth. And I think they're very important signals which are coming in from the government in terms of Atmanirbharta, in terms of production-linked incentives. So I think there is going to be a significant amount of capital investment, which is going to happen, not next month, but certainly over the next few years. I think it is, again, in the enlightened self-interest of banks to make sure that they refashion their strategies to make sure that they can support the industries which are going to be the growth industries of the future. And of course, last, I think there are changes which are happening in the rural marketplace, which are very, very significant. I think we need to make sure that banks, in terms of the distribution systems, in terms of their outreach, are there to support the rural economy and its changing structure.
What do you see as the forward-looking strategy for Bank of Baroda over the next 3 to 5 years? As you were mentioning, some things have changed forever, and digital banking, I would say, has become a big part of it. It's the game changer. It's something that no bank can afford not to adopt. So what are your plans in this regard?
You're absolutely right. Digital is going to be possibly the single most important driver of change, and where you cannot simply afford to be behind the curve. So when it comes to, for instance, again, deposits. So even as we speak today, 85% of all new deposit accounts which are being opened in Bank of Baroda today are opened through tab banking. I hope within the next few months it will be 100%. Right. Similarly, when it comes to loans, we have a very important initiative we have launched for digital loans. Again, I would believe that within the next few months, maybe a year and a half, almost all our home loans, all our car loans, all our personal loans are going to be digitally delivered. Now, this is something which is important, not only in terms of making sure that you reach the customer efficiently, but also because it's a cost imperative. The cost of delivering products digitally is far cheaper. And that's something that we must do if we need to keep our costs under check. The third part is in terms of the channels. I think we must have a distribution structure which is much larger but much lighter as a footprint. So branches will become less important, but other means, for instance, business correspondents. Now, as of now, our business correspondent network is about 2.5 times our branch network. I anticipate it could become even 3, 4, even 5 times that. And that's a great way of outreach into rural areas. Then, of course, I think human resources is something which is very important. I anticipate that over the next 3 or 4 years, it's not that 50% of our workforce might be working from home, but less than 50% of our people will be working from branches and offices of BOB. The others could be working from home. Some might be feet on street. Others might be actually in a hybrid working where you come to the office for 1 or 2 days, and quite a few others might be working part-time, maybe a few days a week or a few hours a week. I think this has, again, a tremendous potential in banks being able to tap a great variety of talent. And BOB, I think that way has been a pioneer, particularly in terms of lateral recruitment. I think one of the greatest tragedies of public sector banks has been that they have been only suppliers of talent to other banks. I think BOB that way has been a pioneer in as much as it has been able to attract talent from the market. So you have experienced industry professionals from premier foreign banks, private banks who are heading key verticals in BOB. I think that's something which is very important for both BOB and public sector banks. They need to remain contemporary and cutting edge. So I think there's a very large agenda which we have to pursue over the next 3 years, and there's no choice in terms of being proactive. Well, I'm sure the world in 3 years is going to be unrecognizable as compared to where we are today.
Fantastic. Thank you so much, sir, for speaking with us, and wish you all the very best.
Thank you, Tamanna.